One of Trump's executive orders yesterday, which were published today in this article, Trump is following up with his loading up of oil support. And if you saw yesterday that a couple Danish wind turbine companies took a big hit when he paused the leasing to them, and we'll get to what I believe at some point. If you take a look at the last 4 fiscal years, sorting for clean and energy, you'll see the thousands of transactions ranging in the billions of dollars that have been supporting these low energy density companies, which have been bolstered by a lot of government support worldwide, especially in the Western world, these last 4 years. Sunrun is a solar energy company based out of California, has a back and forth profitability, um, but they have not been profitable in the last 4 years per their 10Ks. I went ahead and calculated the difference of means between the actual and the estimated earnings per share in the last 4 years. Here's the tabulation right here. And I went ahead and saw or tested the discrepancy between the estimation and the actual. And this did not pan out to be a result of significant value. 85% of the time they're about even, and 15% of the time it's a significant difference. If you want to take a look at the numbers here. So the associated probability for the calculated z-score of negative 0.18 is approximately 85%. So z-score pertaining to the amount of standard errors from the actual EPS, how far away on average the estimated is. So it's a non-significant number. So I went ahead and also tabulated the data for every average market price in the last 4 years, as seen here. For the last 4 years, average stock price, etc. And I sorted for each day with earnings. As seen here, I want to check the code out. And I went ahead and took the day that earnings come out, added and subtracted 3 days, and calculated the percentage change between the interval with the middle point representing when earnings came out. And you come away with an average mean percentage change of negative 2.8%. And I tested whether this is significantly different than zero, which would suggest that it is always negative, which did not appear to be probable. So, on average, it's not going to be dissimilar to zero, as represented by the p-value here. But if you actually take a look at the confidence interval, so a 95% confidence interval representing, 95% of the time the true mean is in between the points negative 12 and 6. You wouldn't with 100% certainty be able to say that the mean is equal to zero or that there is no effect. But if you actually take a look at the nominal range, you see 12 negative values and around 6.5 positive values. And the sample mean of this calculation is negative 2.8. So, and if you bump up into a t-score and lower confidence intervals, you get still a non-significant result. But this is both compelling and not compelling in terms of whether it is always a negative result when these earnings come out. And here over here, you have a daily price to earnings ratio of Sunrun over the last 4 years, Sunrun actual EPS over the last 4 years, and this is actually inaccurate. So, what do we do with this information? I was not fully convinced at this point, and I took a look at the insider trading um, action, and in the last 3 months, there's been positive net sales, as in more people are selling than they're buying. And in the last 12 months, even more representative of this. And the nominal value is actually 70,000, negative 70,000 net activity. And if you take a look at the last 2 months, you might see that there have been far more direct sells than far more direct buys. In fact, there have been no direct buys. The only acquisition of stocks have been non-open market, as in, in my uneducated opinion, share issuance, share packages to the upper echelon of the company. So, with a non-profitable company, where's the logic here? If you have if you're going to have a surprise, as you did here in Q2 fiscal year 24, are the insiders going, well, if they're reserved, they're certainly not going to be stacking up shares, because that would be insider trading. But if they're going to have a surprise profit over here, would they be selling at all? Anything? Because why would they want to prevent the realization of those profits? Again, here's the last around 2 months of insider activity. Not a single direct buy by insiders. And you may have caught wind in the last 1 to 2 days. A lot of the executives are selling their shares. So, if you're like me, you'd maybe be interested in playing the earnings, trading the earnings call. The strategy I've devised with the help of the handy tool ChatGPT is delta neutral hedging with shares. So how it works: buy Sunrun shares equal to the delta of your put option. Example, if the delta is of the strike price is 0.40, buy 40 shares of Sunrun for every put contract. Rationale: if the stock price rises, the gain on your shares offsets the loss on your puts. If the stock price drops, the put gains in value while the shares decline. This is essentially, let's make a new page with share strategy. What we do is we prevent any P&L up until our expiry date, landing on the 21st of Feb, by buying shares equal to delta times 100 times amount of contracts, as seen in the ChatGPT log. And you can verify that information for yourself if you do some browsing on Google. So the purpose of this strategy is actually to carry our option or carry our bet up until a point we want exposure to the stock. So, well, in a sense, we don't want options P&L up until the point we want to make a bet. So that's why I bought the shares. So come 3 days prior to the estimated earnings release, Q4 2024, additionally, the 10K will be released on the 21st, expected, I will sell my shares and allow myself exposure to P&L during this time, and allow myself exposure to the bet that EPS will be negative and the share price will suffer. Let's go over some other instances of what could occur right here. So if you take a look at run right here and you go to 5 years, you'd see that there's some relative strength around the 8.5, 8.3 support. If the future is such that the stock price goes below this established support, I have a sell order. I chose $8.30. Um, $8.30, which will sell my shares and allow for a premature options profit or whatever that would make in that run below. And if it, I'm going to sell 70% of the contracts. I have 10 and keep 3 and re-neutralize that options contract with delta times a 100 times amount of contracts remaining for me, which is 3, and carry that up until the earnings. If the future is such that the stock price increases or bounces off the resistance or the support, um, I plan on taking profits on my shares eventually, or in one sum in one foul swoop, and doubling down on my option strategy and reneutralizing and carry out to like expiration. And maximal loss potential is those 10 initial contracts which I have recently purchased. So